Hey guys, good morning everybody. All right. Robert, want to kick us off, introduce our guest, sir?
This is the fellow that manages our pension plan from Alesco.
Jim Gould.
Jim, good morning.
Good morning. Am I ready to go?
You're ready.
I'm
Give
on.
us some good news.
Good morning. Good to see everybody, and the numbers have been strong, so hopefully you're all happy with this. So just a couple things. There's a lot going on around the planet right now, as you all know, and there's some very scary things that are happening. As is always the case, the future is unknown, despite many very people showing a great deal of conviction about what's going to happen. When it comes to asset allocation, when it comes to managing an institutional portfolio, and then we talk about defined benefit pension plan to boot, the whole concept is looking at asset and liability matching, and that we have a long-term liability that affords us the opportunity to invest in the better performing long-term assets to fund that liability, and that's equities. That's the stock market. The stock market is a market of ownership. The bond market is a market of credit. And if you think about anything, any business that ever gets started, think about starting a pizza parlor. And the person who's starting the pizza parlor is going to go to the bank and borrow money. Well, let's say they borrow at 7% from the bank. The owner of that pizza parlor better make sure that they can sell enough pizzas at the right price for that to be able to cover that 7%, plus make a return for his or herself on top of that. So that's the equity side of things. And so the return on equity investments will always be higher than return on debt investments. Returns will always be higher than bond returns over time, and that's the operative phrase, is that because it doesn't happen every day, doesn't happen every quarter, every year, you can go years, and the market has shown this, where stocks don't do as well as bonds. You can go 5, 6, 7 years. That type of time horizon happened just at the beginning of this century. From January 1st, 2000 through the end of 2009, the S&P 500, the primary equity benchmark for U.S. equities, actually had a negative return, total return for 10 years. Fortunately, other parts of the stock market were doing well. And so a diversified portfolio, emerging markets international, developed markets international, small and mid-cap stocks and value stocks over that 10-year period all had nicely positive returns. So a diversified portfolio made a decent return. The bond market had a decent return at that same time. But if you had all your money just in the S&P 500, you would have gone a decade without any return on your money. So that's what we're doing for you, is we look at the world based on the investment world based on asset allocation. Stocks versus bonds, and the subcomponents of those two categories. And that's how we manage risk. Managing risk is an interesting thing. You think about managing risk, you might think as, well, that means keeping risk to a minimum. That's not what we're trying to do. We're trying to optimize the level of risk in the portfolio. We're embracing risk. We're taking risk on. We're just taking it on in an intelligent way. We're taking it on in a way that diversifies risk. So when I say about diversifying risk, right? If you go into a roulette table in a casino, and you can say, okay, I've got different opportunities here. What's my highest opportunity to win? I could put my chip on 36 black, right? And gee, if it turns up 36 black, it's a great payday. But what's the probability of that? It's very low. You spread your chips around the table, and the probability of winning is getting higher. By the way, this is not me endorsing making money in a casino. It was just a bad analogy that popped into my head while I was talking. But you get the general concept, right? is that we want to be diversified. We realize that we have to take risk in order to make money. So with that soliloquy, I'm going to get into the report here. And so the three accounts that we manage for you, and thank you for the opportunity to do so, are identically managed. So I'm going to talk mostly about the non-salary plan, and if you have the reports before you, you can see that the other two plans follow identically because they are managed identically. You'll see the asset allocations are virtually identical. The returns for the different time periods are virtually identical. So let's look at the non-salary DB plan on page 1. You'll see the asset allocation, talked about embracing risk, talking about we have a long-term liability with the pension liability. So we are using the best performing long-term assets to make up 2/3 of the portfolio. So equities represent 66.5% of the portfolio. Your policy has a range that's kind of a floor and a ceiling in terms of how much we're allowed to have in equities. And the low point is 51%, the high point is 71%. So we're towards the higher end of the range, but we certainly are not maxed out. And then the rest of the portfolio is in cash or fixed income / bonds, okay? So fixed income, that's the bond market. Real return assets, we own Treasury inflation protected securities. So it's a Treasury bond. It just reprices a little bit differently than traditional bonds. So think of it as 2/3 of the portfolio invested in more volatile, so the ups and downs are greater, but a higher average return, a steeper slope. We're going to draw a graph, right? Okay, this is the stock market. It's going up like this, but it's nicely positively sloped. If I look at the bond market, it's also moving up and down, but it doesn't move up and down as much, but the slope is much more shallow. So that's how the portfolio is positioned. When we look at page 2, we look at just the equities and how they're allocated. And again, you've been through, or most of you, if not all of you, have been through these reports before. We're broadly diversified across all kinds of different equity investments. We're diversified based on geography. 70% of the equity investments are in U.S.-based companies, 30% in companies that aren't headquartered in the United States. And then you can see how that we have medium-sized companies, smaller companies. We have a skewing towards value stocks. Value stocks, simply put, are companies that are trading at lower valuations relative to their price, the stock price that they're trading at. So if you think about a stock that's trading at a lower price relative to how much money they make, earnings, how much cash they generate, how much assets they have, those are value stocks, those that trade at lower prices relative to those financial metrics and others. And then on the bond side, we can look at page 3 and 4 really kind of almost at the same time, and what we've been doing in bonds, and we've been talking about this for the last few quarters, has really been focusing on high credit quality. We don't want to take a lot of credit risk right now. What's happened is that it's not at all that we're predicting that we're about to undergo some major default issue in the debt markets. It's simply that the incremental yields for taking on that additional credit risk are very low. You're not getting paid much of a premium to take on more default risk. And so with that being the situation at this point in time, we own very high credit quality bonds. All right, I'll get into the fun stuff. Let's look at page 6. Here we're looking at, this is a quarterly meeting, so we certainly want to talk about the quarter. There's different time periods here. The top of the columns, you can see quarter to date, YTD is year to date, 1 year, 3 years, 5 years, and since inception. Okay, so quarter to date, the far left-hand column, the beginning of the quarter, that would have been right at in effect the end of March, 42.946 million, so almost $43 million. There were contributions into the non-salary plan of $329,000, $893,000 of distributions, interest and dividend income of $322,000, and capital appreciation of $3.6 million. So that $322,000 and the $3,610,000, those two numbers combined equal the total investment gain after fee, which is that $3,933,000. Bringing the value of your account of this account to 46.3 million. So for the quarter, the return was 9.18%, which is, obviously that's a great quarter. We're happy about that. What's interesting is you look at it on a year-to-date basis, and the year-to-date number is lower. So what you can infer from that, obviously, is that the first quarter was slightly negative. And if you go back and you look at the report from last quarter, you'll see it was slightly negative. What happened? Well, what happened was we had a war with Iran. That's what happened, right? And in March, we had nobody knew what was going on. Nobody knew what the outcomes might be. How long are oil prices going to be elevated? How high are they going to go? If that sounds familiar, it's because we're in the same situation right now, right? We don't really know what's happening. How long is this going to continue? When will this be resolved? The good news is that when we saw what appeared to be a resolution in the works, we saw oil prices drop very dramatically in a short period of time. Why is that important? Because right now the biggest economic risk that our economy and many other Western economies are facing is inflation. We have higher levels of inflation. Inflation is, particularly at the levels that we're operating right now, is bad. It's bad for a variety of reasons. The biggest reason, though, is that there are so many people in our country, roughly half of U.S. households have no real assets. They don't own personal property, real estate, and they don't have any exposure to stocks. It's like 45% of households. And so why is that such a big deal? Because those investments, real estate and stocks, are a hedge against inflation. You generally get real estate generally keeps pace with or even does a little bit better than inflation, as does the stock market. So when we have higher levels of inflation, we have a giant percentage of our population that is starting to struggle. And the longer that higher level of inflation continues, relative to wage growth, last few months, inflation has been higher than wage growth, even though for about a year and a half prior to that, it was just the opposite. Wage increases were higher than inflation. Last few months, that's changed. And so that can have an impact on consumption. Consumption, what you spend, what I spend, that's really what drives the U.S. economy. We've got some slides on that later if we have time. Okay, so let's just stay on the same page. If you look at the last year, do you have your actuarial return expectation is it 7.25? 7. What is it?
Flat 7.
It's flat 7. Okay, so you got. Over the last year, you made 17.6%. So that was a really good year. So that helps us get ahead of the game a little bit. You can see since inception, the far right-hand column, the average return on the portfolio has been 9.5%. We'll come back and we'll look at some of these numbers a little bit later relative to peer numbers. On page 6, I want to just look at the one-year column on this slide. You can see, again, as a reminder, the gray shaded lines represent how the central plan has performed for the different categories: equity, fixed income, real return assets. So we look at the top gray shaded line, equities, and you look at the third column over from the left, it's the one-year column. And so the equities in this account for this particular part of our charge as your advisor was up 25.81%. So equities did very well over the last year. As you work your way down that column, you can see if we look at the S&P 500, it was up 22.3%. So you can see your equities did better than that. Now, how did that happen? Well, it did better because mid-cap stocks were up 25.89%. And small cap stocks were up 37.5%. It's a very strong return. And emerging markets was up 43.5%. So we'll talk about that for a little bit. What's going on with emerging markets? Are the economies in some of these emerging economies, are they growing at some ridiculously fast rate? And the answer to that is sort of, but it depends on what you're looking at. There's a lot of major semiconductor companies are headquartered in emerging market countries, in Korea, as an example, in Taiwan. And so the returns for those businesses, because of this AI infrastructure build out that you've been reading about and hearing about, there's just tremendous demand for their product. And so they have great pricing control. They're able to raise their prices, and everybody still wants, no matter how high they raise them, everybody wants to continue to buy. So that's a temporary phenomenon, because what happens, like anything else, either demand through just a regular business cycle could slow down, but probably a more likely scenario is there'll be additional supply. Other companies coming into the marketplace that can compete with the technology that currently exists, that competition would lead to some price suppression. Any questions about that? That's a huge issue right now as it relates to the stock market, artificial intelligence, and it's a big issue from a variety of perspectives. I just talked about one, the build out of the infrastructure and who the winners are going to be for that. Who's paying for that are generally these giant technology companies that you may have been reading about. Meta is one of them. There's a whole, they're all doing Alphabet, which is Google, Amazon, Oracle, and on and on and on. These large technology companies are investing literally hundreds of billions of dollars each. We're talking about trillions of dollars cumulatively to build out the artificial intelligence infrastructure. And so what Wall Street's trying to figure out is, in effect, is this a good idea, or are they spending too much? Because you can spend too much. You can spend so much that you don't really get that great of a return on your investment. Plus the technology and the build out that's taking place, there's going to be some, through software, there's going to be some commonality of ownership. And so other people who didn't spend any money to build out the infrastructure are going to benefit from that. And so does it make more sense to invest in a company who's going to be utilizing AI services, but didn't spend a nickel in terms of building out the infrastructure? Is my return on investment going to be better in those businesses than investing in those these giant technology companies, the hyperscalers as they're referred to? All right, I'm just going to give you one quick. How am I doing for time, Tim?
You're good. You're good.
Okay, so on page 7, this is the Alesco report card. So what we show here are the returns. I want to point out one thing. Some of you have seen this report before. This has a 3-month lag. So this is a March 31st report, not June 30th. And it's only because the data is not yet available through the end of June. But this shows, if you go back and you look at the last quarter report, you can tie out these numbers. So the 1-year return through the end of March, the 3-year average return, 11.7%, and the 5-year average return, 6.6%. And then it shows this big database, the Alpha NASDAQ database, is how other pension funds performed that are managed by independent firms such as Alesco. And you can see that we compare favorably over all 3 time periods. And we look at, so one is just pensions, that's the middle line of column, middle line of numbers. And then there's looking at all of the different, this would include endowments and foundations and pensions that have a moderate asset allocation, and that's an equity allocation, a stock allocation similar to what you have. And you can see we performed well relative to that database too. All right, any questions? All right, so the other 2 accounts, again, look very similar. Results are the same. I wanted to show you just a couple of slides here on page 29. And we're looking at just a 3-month period here on page 29. And this is the breakdown of where the returns came from in stock markets in different parts of the stock market. So we're looking at stocks globally. We're looking at then just U.S. large, U.S. mid, U.S. small, developed, international, emerging markets. So the The real kind of crazy number here is the emerging markets number. Emerging market stocks did great for the quarter, but you could see how concentrated the return was in semiconductor and technology hardware. So that's the purple component there represents just the technology, hardware, and semiconductors. The good news is that when you look at U.S. mid-cap, U.S. small-cap stocks, two important parts of your portfolio, the majority of those returns came from outside of the technology sector. And so, again, the whole idea is to be diversified. So what's driving the market? Why is the market doing so well? With all the bad news on the front page of the newspaper. The answer here is on page 30, and that is that corporate earnings have been growing at a ridiculously fast rate. We're growing at the fastest rate corporate earnings in the United States in a couple of decades, and it's expected that they're going to have a big increase in corporate earnings in 2027 as well. So the stock market is enjoying that, and as what's happened is, and you can see this a little bit if we go to the next slide, page 31, that if we look at this chart, which you've seen before, we break this the stock market down into three major categories based on geography. The green is U.S. stock market, the teal is a developed market international, and the purple is emerging markets. The point of this chart for this conversation is that if you look at the orange diamond in each of those columns, each of those bars, which is a 15-year range of valuations on the price to earnings for stocks, and relative to the black circle, you'll see that for the quarter, there wasn't much of a change. And what that's saying is that the stock market went up a lot, not because investors were paying a higher multiple for each dollar of earnings. It's just that the dollar of earnings went up, increased, or they got more dollars. They got more dollars for these companies. And so the earnings, what's driving the market right now is not is simply a reflection of the rapid expansion of earnings, both U.S. and abroad. Okay. Just one thing I want to go to, and page 34. Kevin Warsh, as you may know, is the new chair of the Federal Reserve. We just had a meeting earlier this week. They announced that they weren't going to increase interest rates. There are 12 voting members of the Open Market Committee and FOMC, the Federal Open Market Committee, and 9 of the 12 voted not to raise rates. 3 of the 12 voted to raise rates. This just came out 2 days ago. You may remember what happened that in the last hour or so of trading on Wednesday, market got clobbered. Went down pretty good because they're like, wow, geez, we got three of the board governors are thinking about we need to raise rates. Nobody was saying they wanted to cut rates. Even Marsh, people aren't sure yet what he's thinking. And so the bond market has been selling off, and in particular, long-term interest rates are going up, and then short-term interest rates have also moved up, but not to the same degree as longer-term bonds. Okay, so what does all that mean? It means that investors are concerned that about 2 things. One, that interest rates are going to be higher for longer because inflation is going to be higher for longer. And so that's why interest rates are where they are, because inflation is still going on, and we have all these uncertainties as it relates to, in particular, energy pricing. The inflation bubble we're seeing right now, and hopefully it is a bubble, but the inflation increases we're seeing now is almost exclusively tied to energy pricing, oil pricing. And so, the longer that goes on, the more problematic that will be. But this top chart here shows you that in just 6 months, a little more than 6 months, how the prediction for interest rates has changed. So it's maybe a little hard to read, but I'll just say what that chart is about. Is that was at the beginning of this year, most bond investors thought that the Fed was going to be cutting interest rates a couple of times, and now the consensus is that the Fed is going to be increasing interest rates a couple of times over the next few quarters. So higher interest rates are generally not favorable for stock market pricing. That the stocks investors would prefer to have lower interest rates. Why? That means because lower interest rates means lower inflation. When inflation's lower, and I'm looking at a company that's going to be generating earnings 3 or 4 or 5 years out, those earnings are worth more if inflation is lower, right? Inflation's higher, those earnings aren't going to be worth as much, right? So the stock market likes lower interest rates. What's offsetting that is that corporate earnings have been so strong, it's allowing the stock market to still do well. All right. One thing is interesting, and I'll just wrap it up with that. The job market has been really quite stable, and so there's certainly been some big headlines as it relates to layoffs, large companies. You may have heard that some of these companies have actually overdone it a little bit. They've cut back on their announced layoffs, and they're not letting the number of job cuts aren't going to be as great. Some of that is tied to industry-specific activity or lack thereof. And some of it's tied directly to AI. But what's happening is there's still more demand, and so what you'll see here on this chart, the bottom chart on this slide, shows you that job openings are relative to the number of unemployed people is starting to increase again. So that's a great forward indicator as it relates to future demand for employment. So any questions about this?
One thing.
Sure.
I had some of this dealing with the market panicking. That makes sense, they're panicking for some of these up and down stages.
Yeah, so if you all heard the question, is the market panicking? So I don't think the market is panicking. I think what's happened is we have, there's just a huge amount of money that is being traded on a short-term basis. There's a lot of, it's almost, how sometimes people say the stock market is legalized gambling. There's an element of truth to that, particularly now, in that there's a large number of investors, both institutional and retail, who are looking at very short-term single pieces of information and making an investment decision out there. In, they're out, they're in, they're out. Part of that is because it's so cheap now to trade. It used to be the frictional costs for trading were much higher. Now it's, Robinhood and even Schwab and Fidelity and all these other places. It's so inexpensive to make a trade that people don't think at all about, just go ahead and buy something or sell something. But the long term, there are long-term investors as well, and that's where the real serious money is with long-term investing. But we are seeing higher levels of short-term volatility because of that trading mindset.
Any other questions for Jim?
Jim, what is the data center business? I mean, I know you were talking about AI. Is that gonna slow that down in terms of job stability and the overgrowing potential of AI?
So the answer is, my answer is I don't know, right? But what I would tell you is I think it's an interesting, the whole data center build out and AI infrastructure in general is very interesting as it relates to employment, because there's a lot of jobs that are being created right now for the build out of AI infrastructure. But it could be temporary in nature. And then once AI expands and grows, and there's a whole idea of generative AI where the software makes itself smarter over time, the impact that has on the labor market is yet to be known. There are optimists out there who say that it'll be relatively benign all in on a cumulative basis. Yeah, there'll be pockets of labor disruption, but there'll be offsets to that. One saying is that you won't lose your job to AI, but you will lose your job to someone who knows how to use AI, right? So there's that type of mindset. There's another mindset, which was, Elon Musk as an example. He says, none of us are going to have to work. Very few people will actually be working. We're going to be the Jetsons, right? We're going to just kind of lounge around and, fly around in our airborne Teslas. And so, that is so they have, who knows how this is going to play out. I do believe that my own take on it is there's going to be severe disruption in many sectors of the employment arena, and I think the disruption is not all job losses. There'll be job creation associated with that as well. But I think we're going to have a lot of industries. Financial analysis, as an example, is going to be so much faster with AI. You're going to need far fewer people. Tax preparation, tax compliance, legal compliance, drafting wills and estate plans, and all of that. So much of that can be automated. On the flip side of it is the enhancements that can come from in medical research and testing and extrapolating what outcomes mean and forecasting things. So there's going to be some, I'll tell you, the Chinese curse may live in interesting times. We're in it right now. It's going to be 10 years from now. Things could look a lot different than they do today. What you think about Central?
Yeah.
Central will have, I would guess, only positive outcomes as it results to AI. You'll be able to enhance your service because of AI. How, I can't tell you. You would have a better guess than I would. But you're still going to need people to need to get around.
Yeah.
They're still going to need the service.
Good report. I just wonder how many people around this table or in the audience will use AI if we were in school today. I think all of us would.
So learn about it.
Even if you say no, I know you would. Good. No, that was good, Jim. I think your returns were better than Tim, so I guess Tim does.
So Tim is not playing hooky. He's getting his hip replaced.
Oh.
Yeah. So he's
He's down
I'll be
and out
thinking
for a
of him around noon today. He goes, it's happening right around noon. So keep him in your thoughts.
Okay. Thanks, Jim. Appreciate it.
All right. Good to see you. Thank you.
Thank you. Good job.
I can turn it off a second.
We're gonna.
Welcome, we all set over
Their
here?
smile.
Okay, let's go with the Audit and Finance Committee. Melissa, I'll turn it over to you. Talk about, when I start with first quarter.
Actually, we're gonna start with the renewal for the workers' compensation.
Okay, that's good.
Doug is here.
Oh, I didn't see you. Hi, Doug, how are you? Okay, just come
Where do you
here.
want me to?
Come on over. Right
Oh,
up.
front and
You
center?
can sit right there, did you?
Sit right there,
Yeah.
okay.
Snuck in.
Can I stand up so I can point at this thing?
Sure, absolutely.
Is that all right? All right, perfect. So, those of you who don't know me, I'm Doug Cronin from Crown Risk Management. We manage the workers' compensation program here at Centro. This is the renewal. We'll go through the good stuff here. It really shouldn't take very long because it's actually really good news. You are in a large deductible program with a $150,000 specific deductible. Your payroll, this is always our premium is a function of payroll. You can see you had an increase in payroll from 38 million to 39 million, small increase. You can see that leads to a work comp deductible premium from 1.16 down to 1.15, which is a decrease in the rate. That's why you see the decrease there. Our administration expense stays relatively flat throughout the years. And then you can see that our surcharges and assessments from the state of New York drops from 220 down to 113,000. Okay, we have a maximum loss content that's exactly the same, so that's the maximum amount of claims that you can have within a year. And you can see that your total paid-in premium is 1.315 versus 1.4. Those charges stemming from the reduced, a little bit of reduced on the premium and a little bit from the state of New York. So if we can scroll up a little bit. Keep going, keep going, keep going. Keep going. Okay, perfect. That's good, perfect. So the reason that we had the decrease in the New York State surcharges and assessment, you can see your modification history over the past 5 years. Yeah, okay, we got 5 years there.
Doug, why don't
Okay.
you just explain modification, what that means to the board?
Yep, perfect. So your modification rating is based on the number one, okay? If you are under the number one, you're a better risk to the market. If you're over the number one, you are a little bit of a worse risk. So you can see that it's based on, we dropped the current year, go back 3 years for claims data, and then there's a maximum loss content to it, so it's a big mathematical formula.
So we're going in the right direction.
You're going in the right direction. So your past 3 years of claims have been 436,000, 1,041,000, and we have 744,000 this year in claims. Okay. Prior to that, you had 3.1 million and 1.9 million. So we were hired in 2023. So I guess we're pretty good.
I would run with it.
I said up here the first year, I said either I'm lucky or good. It looks like I'm okay, right? So, well, not only that, we've really taken a very proactive approach to the claims as well as the team at Centro. So Jackie's team and Stacy, Chris, it's really been really kind of a pleasure to work with because we're getting really good claim results. And when we get good claim results, we have renewals like this, which are easy. So our New York State surcharges and assessments are always our mod really affects those. So you can see that drop in the mod really helps our surcharges and assessments, okay? We do have a little bit of an increase in our claim handling fees, but we have less claims, so we're estimating about $70,000 just in claim expenses. So our total estimated cost 1.5 million to 1.385, which is a nice decrease. Okay. We also have our cash collateral on hand. They're asking for an additional $1.2 million in claims. We feel that that's about right. They first started about 1.5 to 1.8 million. We thought that was a little egregious. To hold 1.2 is a pretty reasonable number. Okay, and then always here we have our loss development factors. That's how we track claims. So our older claims, so years 4, 5, and years 5, those claims aren't going to develop as high as claims in year 1, where they're going to be we're expecting about 30% higher. So our $700,000 in claims so far this year, we're going to expect that to end about 30% higher. So it's going to be about $900,000 to $1 million in claims as they start to develop. So, with that said, I went through the claims, payroll's up, you have about 100 claims a year, Travelers has come out and done 2 loss control visits through the year. One is an ergonomic study for the buses, because that's the majority of the claims that we're seeing. Shoulders, wrists, necks, things like that. So they did a nice ergonomic study on that. And then the other one was on our loss prevention and how we're actually managing claims. So Travelers has been a good partner. You've been with Travelers for a long time. When we go to the market and we look at other potential vendors, a lot of them really balk at this just because of the high claims for the previous years. So insurance companies have big buildings for a reason. They like good risks, you know? Fortunately for Travelers, this is actually a really nice risk for them. They're really comfortable with you. And I think the claim team works well. The Centro team and the Travelers team work very, very well together. I will say that for all of the carriers that I work with, Travelers is one of the most responsive within claims management. So their adjusters are very seasoned. They know exactly what they're doing. They don't have too many files on their desk. So they're able to really attack the claims and help not only help the participant, you know, or the claimant, but they're also able to identify where there's potentially not so true claims, fraudulent claims, if you will. Okay? So this is an 8-1 renewal. So the best thing that the only thing that I need is kind of a motion to say, hey, this is good to go forward with, and I will get the binder done today, and we will be good to go for the next year.
Questions for Doug? Any comment, Chris? Anything?
No, it's been great working with Crown. They've done a great job and helped us anytime we needed something. They've been very responsive, so thank you for that.
Yeah, not a problem.
Okay, I have a motion. Tina, second. Robert, any discussion? All in favor? Aye. Go for it, Doug.
Great, thank you guys.
Okay, just need a couple minutes, guys.
I was gonna grab all that.
Okay, Melissa, first quarter financial statements.
Good morning, Mr. Chairman, members of the board. This is our first financial statement of this fiscal year. So it's representing the first quarter of fiscal year 2027, and this goes through June 2026. So as of June 30th, 2026, the quick ratio is 7.21, which is a slight decrease from our quick ratio of 7.69 for the first quarter in prior year. Current assets are $64.8 million, reflecting a $3.5 million or almost 6% increase compared to June of 2025. However, our liabilities are also up, with representing $7.7 million, reflecting a $932,000 or almost 14% increase since compared to June of 2025. So a more detailed look at the statement of net position. Current assets, cash and cash equivalents total $46.6 million, reflecting a $6.1 million increase compared to the same period last year. The key factors attributing to this increase is we have a lower receivable balance, the increase in SOA, so we have a little more cash on hand, and then the investment revenue income. Receivables and accruals total $9 million, reflecting a decrease of the $2.7 million. Trade receivables increase of $132,000. Mortgage reporting taxes, a slight decrease of $42,000. Operating assistance is pretty much in line, and that grant receivables is really driving that variance with a decrease of $2.8 million. Materials and supplies, they totaled $3.4 million, reflecting a decrease of $146,000 compared to June of 2025. This reduction is a result of regular investment reviews, timely disposal of obsolete inventory, and continued efforts to optimize our inventory levels. The prepaid expenses and other current liabilities total 5.9 million, reflecting an increase of 309,000 compared to June of 2025. This increase is primarily due to the increases in our insurance policies. Is there any questions in regards to our current assets? Moving on to our current liabilities, accounts payable and accrued expenses total 2.5 million, reflecting an increase of 804,000 compared to June of 2025. The increase is mainly associated with the timing of payments and just the normal cost of things increasing. Approximately 98% of our age payables are within 30 days due, so we're paying our vendors timely. Accrued salaries and liabilities are 3.9 million, which are in line with prior year. And estimated claims payable total 1.2, reflecting a slight increase of 115,000 compared to June 2025. This increase is a result of the adjustment at 331 to our IBNR, which then better reflects our exposure to outstanding claims.
IBNR incurred but not reported, just for.
Thank you. Any questions in regards to the liabilities? Okay. On to our statements of revenues and expenditures. After 3 months ending June 30th, the authority is reporting no consolidated operating income or loss. This does exclude our capital contributions and non-operating expenses. Operating revenues are functioning at 2.3% over budget, 8.2% over prior year, and 15.4% over fiscal 2025. So our revenues are going in the right direction. The favorable budget and prior year variances are associated specifically in regular line revenue. We had higher than anticipated farebox revenue and pass sales. Farebox revenue specifically is up 5% compared to prior year, and that is primarily in the Syracuse operations. Additionally, there was a large unanticipated single ride pass purchase by the Syracuse City School District, which is also contributing to the favorable variances there. Special line revenue, the favorable variance year over year is associated with rate increases to our contracted services, increased service requests from Amazon, which is being partially offset by the decreased service requested by SUNY Oswego. Advertising and other revenue, the favorable year-over-year variances associated with lease contract increases, a slight increase in our RTC parking revenue, and our increase in our transit advertising guaranteed minimum. Any questions? On to our expenses. As of June 30th, operating expenses total 23.6 million, reflecting a $2.1 million increase compared to prior year, and a $2.6 million, $2.6 million or 10% below budget. Personnel expenses total 17 million, reflecting $1.8 million under budget and 1.1 million over prior year. All personnel expense categories are operating under budget, reflecting a very favorable variance among wages, benefits, and other related costs. As a reminder, those expenses are budgeted to be fully staffed 100% of the year, and we are still understaffed in most of our operations drivers. Notable variances include year-over-year healthcare. UMR costs for active and retired employees have increased, with 7,000 more services being performed in the current year. Blue Cross and Blue Shield's costs also increased by 21.5% year over year. Workers' comp variance is a result of lower claims, which results in lower admin costs. Pension expense variance is related to the 401A expenses, which were partially funded through forfeiture funds in prior year. Any questions on the personnel expenses.
What percent, of the staff, we're not at 100% that you budget for, what percent are we at?
I don't know percentage, but I still believe we're about 30 drivers short.
Well, 22 here in
20,
Syracuse, but we're short a few in the remainder properties as well. So we're probably right around 30 operators short across the company.
Which ballpark, we're at 97, 98%?
Yeah, I mean, just looking at rough numbers, I would say we're probably 90% there. We have 2 open houses we'll talk about later today coming up.
Slowly, someone looking
getting
maybe to
there.
get in here.
I think they'll get ready for general board.
Okay. Non-personnel expenses total 6.6 million, which is 812,000 under budget and 970,000 over prior year. The most notable variances are in risk management, favorable, well, there's a couple, but first being risk management, favorable budget variances associated with insurance policy renewals being lower than we anticipated in some cases, expenses for prior year claims, and the year-over-year variances related to expenses in current and prior year auto GL. For purchase transportation, both budget and year-over-year variances are due to increases in demand, which has grown by 12.5% compared to prior year, and our budget assumption is a growth rate of 6%. Services, year-over-year variance is largely related to increased expenses for tires in Portland, electrical work associated with building remodels, one-time HVAC repairs, sprinkler repairs, fits and drain clean out, and a LC meter project for Auburn. Any questions in regards to the expenses?
So why are you only projecting 6% growth in Calabas?
We have been projecting larger growth year over year in prior years coming out of COVID, and our assumptions were eventually it will have to slow down. But, which is higher than our previous projections of like pre-pandemic, of like 3%. So at discussing with Josh, we assumed that would be an appropriate growth rate at this time.
No, it's just, my experience in all the other areas, we're growing at anywhere from 10 to 12%
Okay,
in
that's good
disability,
information.
disability services and need level. So I just wanted to
Yeah,
throw
that's
that
what I'm
out
gonna
there, that, and I'm assuming actually transportation would grow even more than the services I work at. Because everybody's gotta get somewhere.
You said 10 to 12%.
Mm-hmm. We're seeing 10 to 12% growth.
Does aging population have something to do with it?
Aging population, but I work a lot, I work in the intellectual developmental disability area, and we're starting to accommodate more people with brain injury. As our medical services are getting better, we have more people surviving severe head injury.
Wow.
So everything is just blooming.
Gotcha, interesting.
I just thought that might be
Yeah.
a helpful.
Pay attention to
Certainly
that.
something we can look at.
Yeah, and real quick too, Tina, we have that contract with the union, the MOU.
Yeah.
Where we're bringing more work in-house. So that's why we didn't factor all the way up for purchase trans, because we planned on more of that being in-house, but the growth is still there.
It's growing fast.
Yeah, Heather?
I remember that there was a push about a year ago, maybe longer than that, to increase the paratransit radius around the bus from 3/4 of a mile to 3 miles.
It's still.
Have you heard anything on that? Because that would severely impact.
It's still out there. It didn't, I mean, there was, I think, advocacy for it in the budget this year, but I don't know if any legislators pushed it too hard. I think Tina would probably be able to speak to the stats of it more now.
I know the individual who's pushing it out of Western.
Yeah,
She's a
Buffalo.
friend of mine, and she's relentless. So
I mean, there's been talks about it, and from
Yeah.
the perspective, we've talked about it to be very transparent about the cost of doing that and what it means. And with the current growth we're seeing, it's hard to keep up with the current growth, let alone now add another 2 miles, 2.25 miles to it. I think there's a lot of factors playing into it, but I don't think I haven't seen it being pushed by
It's not being
legislators to the
pushed.
budget.
It's not being pushed really hard, but it's still there.
Yeah.
And one of the biggest arguments in favor of it is a lot more people with disabilities are finding employment because of, jobs can be accommodated, AI, all kinds of things. So now people are struggling to find ways to do it. And that might be a big push to start to make more of it possibly happen. I know some of the transportation groups I'm in, we're not pushing for 3 miles, we're pushing for maybe 2.
I was gonna say like even if you go to 1.5 miles, I think at NIPTA we talked about
A mile and a
looking
half
at
to 2.
incremental, like what would it mean to go from 3/4 to 1.5 miles to
Yeah,
slowly expand, but there's still, I can't remember, the last time we updated the numbers was when you were in DC, so that was a couple years ago, but I think for us it's north of 12 or 13 million dollars
it's
to take
a
that
lot.
increase on. So
Josh, are you seeing applications come in, or is your team seeing application come in from rural communities or just in general here out in Syracuse, where they're outside of the call bus radius and you're doing like we'll pick you up here if you can get to the pickup point? How often are those type of applications coming in?
They're very rare. I'd say maybe 1 a month, if that. It's rare, but we do have some people in the Cicero area currently that do. And I want to say there was one recently in Oswego County.
Yeah, we get a couple just because of the rural nature, but it might be good to start keeping some data on that to show them if they start pushing that initiative is that this is the reality of how many applications are coming in that are outside of the radius. Just good for that.
Well, it would be interesting to see how many people are trying to get, who live in the radius, but can't get out, outside of it.
Like almost the reverse, right?
The
They're not
reverse,
happy
like,
with what they're
my house is in,
but my destination is
but I work over here, and you can't get me to where I work.
Yeah.
There's gonna be a lot of workforce development push in the disability field around this, so
Yeah.
I'll try to keep you guys as much.
And we've been very proactive in the last couple of years with the planning boards in our 5 county friends on the email list. So we're getting anything that's coming in from businesses. If you saw the Amazon expansion conversation, it said in there, Brent, that was triggered by Brent's comment back saying, you need to engage with us if you're looking for transportation. So we're being more proactive in seeing where these businesses or these centers are coming on to say, are you looking for transportation? Let's talk before you get too far ahead to say, we built it, now we need a bus and we can't get there. That creates a barrier and a frustration. How do we help guide them make a final decision before they make
And
it?
5 years ago, it was people were building senior housing
Right.
without talking.
Yeah. So we're doing better at those communications.
We're working on it.
Yeah.
But that's always my first comment. Has anybody talked to bus?
Yeah. So hopefully we're seeing more of that happening to help guide them to say we're not going to be able to serve this location because of whatever reason. So listen.
Good conversation, actually, so I'll keep an eye on this as it develops. Melissa?
So overall expenses are trending 10% under budget, almost 10% over prior year, and 11.5% over, that's a typo. That is fiscal year 2025. Apologize for that. Non-operating revenue totals $19.9 million, which is an 8.8% under budget, 2% over prior year, and 6% over fiscal year 2025. Operating assistance related variances are associated with the increase of STOA year over year, which was a 7.18% increase, which is being offset as we conserve PM and draw that based on need. Mortgage recording tax are exceeding budget expectations by 25% and 7% higher than prior year.
That's important, because that's our local share on a lot of things.
Yes. Investment revenues are exceeding budget expectations by more than 100% and are 27.3% higher than prior year. Any questions in regards to our non-operating revenue? So I generally add a by company statement of revenues expenditures at least once a year. So I included it this quarter, mainly because as the financial position and our funding sources continue to change, in the prior years where we saw large operating incomes, that story is going to start changing as we kind of warned the board in previous conversations. So as we look at this, the operating consolidated, we have no income, no loss. But when you look at it on an expanded view, you see that each company outside of the authority does have an operating loss. On a monthly basis, when we receive STOA, we do allocate that to the operating companies. So CNY Centro, Oswego, Cayuga, Cortland, Colobus, and Oneida. That's allocated on a monthly basis. We reserve allocating mortgage recording tax until the end of the fiscal year to determine exactly where that loss is needed. So that is how the no income or loss is generated, but I thought it was really important to see this view. Is there any questions in regards to this?
So last meeting, the board passed a resolution, so you guys understand as well that the excess mortgage recording tax is what's used to cover the cost of these additional match projects with the 10%. Oswego County made a request for some additional information on particularly how that mortgage recording tax is collected from our county and allocated. So if there's resolutions brought to the table that involve the mortgage recording tax, we will abstain from voting until we have that information, because we need to have the information to make an informed decision.
And we're working on that.
Yeah, we appreciate it.
There's
Yeah, it was a good
much
conversation.
detail, yeah.
I think it's valuable for everybody to understand how that works.
Is there any additional questions? So specifically, the mortgage recording tax statement in June, the receipts total $783,000. MRT is performing 25% over budget, almost 7% over prior year, and 53% over fiscal year 2025. As you see in the 5-year spread, this is a very volatile revenue that we have, and can be unpredictable. The investment report, unrestricted operating cash totals $11.3 million as of June 30th. Uninvested board designated funds is $1.2 million, and total uninvested cash is $12 million. In regards to our investments, as of June 30, we current investments for total $15.4 million, which is operating funds, and $18 million for board designated funds. As mentioned by Lesko, those treasuries that have a longer investment term are performing more favorably, with yields between 3.5 and 3.8%. Any questions in regards to the treasury bills? And our statement of cash flow during the month of June. Operating cash receipts totaled $3.5 million. Cash utilized for daily operations totaled $7.2 million. We received $303,000 in federal and state capital reimbursements and we had a total of $115,000 in capital asset purchases. Any questions in regards to the cash flow? There's some questions that completes the review of our statement for the quarter.
Any other questions from the resident? A motion to accept this, Darrell, second, Julius, any discussion, all in favor? Aye. Okay. Caitlin, you're gonna discuss the thresholds authorization update.
Yes, thank you, Mr. Chairman. Good morning, everyone. So we're looking to update the procurement thresholds of authorization. This resides within the procurement manual. We're looking to add 2 director positions, the Director of Service Development and the Director of Specialized Transportation and Operational Technology. These will be added at the $5,000 threshold, which is in line with all existing directors. We're also looking to update the current title of Manager of Specialized Transportation and Systems Analyst to Call Bus Manager, and this will remain at the $2,500 level, which again is in line with all the managers in the company.
These, position that's open, what are the qualifications for those people and how does it have that?
Oh, that's a great question for
Chris,
HR.
Chris,
So Julius, we want to take that offline. I think that's a more in-depth conversation that we can talk
Okay.
about.
Qualifications, yeah.
Just-
Okay.
That's fine.
They were recent promotions, that's the reason for the change.
Okay.
Any other questions? Okay, we have a motion for this. Tina, second, Heather, any discussion? All in favor? Aye. Now we have resolution for the GenFair software. Caitlin, it's the blue document, resolution number 38.
So this agreement will be paid for with operating funds. Our current fare collection system was manufactured by GenFair. Due to proprietary information, this is a sole source procurement through them, as they're the only ones that are able to provide the support and maintenance for their system. We're looking to enter into a 3-year agreement beginning September 30th. The total value is $435,362. And this does cover 24/7 support as well as any software updates. So we're looking for award for a 3-year agreement with GenFair.
Remember, this is a sole source purchase, so. Questions? I have a motion. Heather, second. Darlene, any discussion? All in favor? Aye.
Thank you.
What's any other business in hand?
I would like to share one important event that's happening in Portland. We will be installing 11 new GenFair fare boxes into the Portland vehicles. That the anticipated installation date is the 2nd week of August. We have community training events scheduled for next week on the 3rd and the 6th. So we will be taking our community bus with our training fare box out to the Cobb in Portland. And try to hit as many of the customers as possible. This project has been a 9-month project that has involved teams across all parts of the organization, to include our revenue collections, procurement, service development, marketing, and maintenance. We've all worked very well together. I'm very proud of this project. We've stayed on task and timeline. So I just wanted to share that with the board.
What do they use now?
They're called pacemaker fare boxes. It's just a box up to a pole that they can either put a pass in or their dollars.
Big upgrade.
Or
This is
their,
a-
yes,
oh,
big
a significant upgrade.
Yes.
And with this technology, because the fare box does require a modem, if I'm saying it wrong, Josh, yell at me, or router, sorry. They are now able to track the buses in Cortland because they're now getting a signal, so they will see the buses in the app. It's a step to projects they were trying to do before Tickle Muller, so we're continuing to improve that.
As well as it will accept all of our fare media now. It will accept the mobile pass and electronic payment. So we're very excited.
Good progress.
Forward. All right, let's take about 5-10 and then we'll get going. We'll get you back on schedule. You all set over here?
Yeah.
Okay, we're gonna start with the Pledge of Allegiance. Our guest of honor, Bill's gonna lead us in the Pledge of Allegiance.
Allegiance to the flag of the United States of America and to the republic for which it stands, one nation, under God, indivisible, with liberty and justice for all.
Okay, we have a quorum present. Our next meeting date is August 28th. Audit and Finance Committee, our board meeting will start at 9:30. Can't believe the summer will be almost done at that point.
Just on.
Time moves quick. Motion to approve regular minutes as of June 19th, 26. Darlene, second Tina. Anybody have any discussion or comments on it? If not, all in favor? Okay. Today is a special day. We have a gentleman here that serves Central in quite a capacity. He's here with his wife today. Your wife's first name? Elizabeth. Elizabeth. Today we celebrate Bear Schercha, who has dedicated 32 years of service as a bus operator. Throughout those years, he has been the definition of a dependable employee. Always showing up, working hard, and doing the job with professionalism and dedication. Bill always respected and cared for every passenger, and of course his co-workers along the way. Beyond being a hard-working operator, he enjoys riding bikes. A little bit different than a bus and a bike. Yes, good. I don't blame you. It seems fitting for someone who has spent so many years keeping people moving safely from place to place. On behalf of everyone here at Central, we'd like to thank you for your commitment, your reliability you set over the past 32 years. We wish you many happy miles ahead, whether on two wheels or wherever retirement takes you for you and your family. Congratulations.
I appreciate this, thank you. 32 years is a long time.
It is.
Come on.
For 32 years.
Awesome.
Great, thank you very much.
Appreciate everything you did, and we wish you the best and enjoy yourself. Well deserved.
Working on it.
That's great.
Thank you, everyone.
Great. Once again, thank you. A lot of years lately. Been coming out this. A lot of years. Julius.
Can I kind of say this, but this young man, I ride his bus.
Yes.
I ride his for years. For many years, I've ridden his bus, man. I miss you.
I'll miss you too. And seeing you all over the place, either in the, getting on the bus or down at the hub or
Yes, sir.
seeing you everywhere. Thank you.
Thank you, Bill.
Good, very good, good stuff. Okay, our Chief Executive Report, Chris.
Thank you, Mr. Chairman. Good morning, members of the board. Although summer's been flying by, we've had some good, impactful meetings and discussions over the last month since we last were here. A few highlights: July 7th, the 36th anniversary of the ADA parade. Every year we've been invited down to be part of that parade. This year was my first year to actually be able to make it in person, just with the timing of some things. So it was great to be down there walking the parade and provide the buses like we normally do. And our very own Tina helped raise the flag at that event, which was great to see, and the involvement. A lot of the advocates that we deal with on a regular basis are there, so it was great to meet some of them in person, where we typically meet with ATAC virtually. So it was great to be there and continue to support that. July 14th, PTLI, the Public Transit Leadership Institute, was here in Syracuse. It's a 6-part year-long series of professional development for mid into senior level managers that are looking to seek to further their careers in transit. It's a great opportunity to expose them to maybe different avenues or different strategies within the industry, but also it allows them to see the different operations. So they visit Syracuse, Rochester, Buffalo, Albany. Typically they go to New York City. This year there was a conflict, so they weren't able to do that, but it's been a great program that they've been running. Several of us have done it here in Syracuse. I know Heather was part of it. And we continue to see the growth and the investment in that program as an association, but also as a company to just continue to engage. And I think it's one of those things where you've been through the program and you work in your cohorts and your group on your projects. There's an end of the year capstone, but those are friendships in the industry that you keep and make into the future. Certainly, as Melissa and Heather just exchanged, I think Caitlin was part of that group as well. That we work so closely together, but there's still, it's easy to pick up the phone and call somebody. James Morrell, who's the director of transportation, was with Jeff and I, and he was with NFTA in Buffalo. But during that time, it was always somebody I knew I could send an email to and say, hey, how's Buffalo doing this? And he could connect me with the person in the industry there or their department that's handling it. So it just also builds that network and that partnership. July 15th, I was out in Albany for the executive board with NIPTA. And it was a strategic planning meeting, just covering many, many things. Our lobbying strategy going forward into the coming year, the budget year. Certainly we know it's an election year. What are we looking to do for the next year's conference? We're hosting it here in Syracuse this year. So just a lot of just planning for the upcoming year and how we want to tackle that. And certainly more updates to come as we start developing those strategies and how it impacts what we're trying to do as a lobbying effort across the state to look at STOA increases for future years and such. Last week, Chairman Leno and I went to Washington, D.C., so our lobbying group that we brought in June, on June 1st was their effective start date. And as I mentioned last month, they hit the ground running. We've been working with them on both the federal and the state side. They wanted us to get down to Washington, D.C. to get in front of our 5 members in the delegation, both Senator Schumer's office, Gillibrand's office, and then Congressman Mannion, Congresswoman Tenney, and Congressman Riley to talk about the upcoming reauthorization bill as the IIJA expires. The month of August, they're not in session, so there's not any activity or activity we can put there. And they felt September might have been too late to the deadline. So we chose to go down in July and meet with all of their staffs, but also we were able to meet with the FTA directly. So typically we work with FTA Region 2 and they've been fantastic, but our lobbyist was able to get us in front of the leadership team of the FTA to share our concerns, highlight a lot of the important work that we're doing and that's happening in Central New York with our system redesign BRT, but also how Micron and 81 project is impacting what we're doing. And talk about the reauthorization bill, what the current House T&I markup, the transit infrastructure markup, is looking like and how it could impact us as a mid-sized agency in upstate New York with all of these projects going on. And then we also met with the Senate Banking Committee, which was both representatives from the majority and the minority, which is a committee we've never met with. And I think in the history of lobbying in Washington, D.C. and Chairman
20 years that I've been going down, this was amazing because the decision makers, we were in front of them. And I think with the Micron expansion up here, I think we're paying attention a little bit more to this area, which helps us all. So it was extremely successful. And it was, you see some of these names sometimes, with the business that we're in, but to actually have a conversation with them. And usually when they give you a certain time limit, when that time hits, you're done. Each meeting went over with the banking committee officials and also the FTA. So I thought that was quite important because sometimes they move you. They didn't do that at all. So it was very good. And I will say Chris did a great job. He was extremely prepared. And because you never know what question could be asked at any point in time, but Chris represented us quite well.
Thank you, Mr. Chairman. So it was a very good trip. I will share, I think the vibe we've gotten walking away from it is there's likely not going to be a resolution passed by the end of September for the reauthorization bill. They're probably going to go to continuing resolution. Certainly we know the midterm elections are coming up in November, so I don't know if there's strategy there. Certainly we'll see where it goes, but the conversations are happening and continuing, and the lobbyist has been fantastic. We actually have a meeting with them this afternoon on a NOFO, a notice of funding opportunity that was released earlier this week to help strategize that in our application and strengthening that application to get an award, and to start strategizing some of our New York State asks as it represents Centro specifically, not just the NIPTA ask, to start engaging with the Executive Chamber office early this year. Because typically her budget is being prepared in the fall for her, if in the course of election year, but if, depending on how that pans out, she would release her executive budget in January. So we want to be proactive and make sure that we're getting our message out there for that executive budget release. Last Friday, I participated with a panel for the Focus Forum.
Good forum.
It was the topic was focused on transportation initiatives for the future of Central New York, which certainly is very fitting in some of the conversations we were just having with Micron, with 81, the growing population in demand that we're going to see to the region. So I was on the panel with Jim D'Agostino, who's the director of the Syracuse Metropolitan Transportation Council, better known as SMTC, and Betsy Parmalee, who is the regional director for New York State DOT here in Central New York. So we each talked about some of our projects. Certainly DOT talked about the 81 project. I shared the status and some updates on our system redesign and BRT, and also introduced them to what MOVE is as part of that project. But all in all, it was a good forum. It was a good topic. I wish we had more time. I think there was certainly some opportunity to have more time to have questions and answers. But all in all, very good conversation there. This week and into next week, we are doing our Reaching Productivity Milestones Roadshow. So the executive team, myself, travels to hit all 6 properties now. 5 county, 2 in Rome, so 6 properties to recognize and celebrate staff and their accomplishments, and I highlight the maintenance employee of the quarter, the operator of the quarter, the admin of the quarter. So that we did do this week. So the maintenance employee of the quarter was Jermel Halston here in Syracuse. The operator of the quarter was Chris Muirhead, who is an operator in Cayuga County. And the admin employee of the quarter was Ryan Siriani, who is the director of operations in Oneida. So it was a fun week in celebrating with them. We had a cookout here in Syracuse for the staff. We had a dunk tank. So several of the leadership team got in the dunk tank and allowed staff to maybe some friendly payback, not necessarily retaliation, payback and fun, but all in all it was good. I think I drank too much water during being dunked, but it was fun in itself. And I will share, Bill Churchill was actually the first operator of the year when we launched this program to see him retire, so his accomplishments were recognized even further. Also, we do recognize Community Commitment Awards, which is the years of service employees and staff, as well as board members have to the authority. So we have a few of those this quarter. So we have Heather celebrating her 1-year anniversary this year. And then we have Neil, Julius, and Tony that are celebrating 5 years. I have pins for you guys here. We can hand out later on. And as we mentioned earlier, as we were talking about some recruitment events and things happening with the budget and full-time staff and what that looks like, certainly Syracuse is a hot priority. I think when we probably had these conversations and you guys came on 5 years ago, we were talking being short 50 to 60 operators.
Yeah.
We turned in a class July 13th. That brought us to 168 full-time operators, which based on the system redesign, we're short about 23 operators. So we're trending in the right direction. The retention rates are doing well. We have a great partnership working with the union on initiatives, the mentorship program, some other MOUs that operations and maintenance staff have been working on. And it's clear that they're working. So we're gonna continue to build on that, but we are hosting an open house here in Syracuse on August 15th from 9 a.m. to noon, and it's the same setup that you can come in, interviews on site. If you don't have a CDL permit, we'll give you the information to get that. We also give you an opportunity to drive a bus if you do have a valid driver's license. And there's several, that's open to operators, mechanics, servicers, and we have several salary positions that are also being posted. On August 22nd, we are gonna go to Cortland and do the exact same setup. So we continue to develop and hire and recruit in Cortland. We just hired on another full-time operator. I think we have one in the hopper for the training class this fall. But we can certainly use a couple more to continue to support that service down there. The Syracuse team here has done a fantastic job of supporting Cortland, but we'd like to still make sure they can be self-sufficient or self-sustained. So we're going to dedicate an open house on August 22nd, 9 a.m. to noon for the Cortland staff. Any questions on my report, Julius?
Make sure that we get that information through email.
The open houses?
Yeah.
Yeah, we can push that out for you. Sure, we'll push it to the board. And you should start seeing commercials, Bren, next week.
Yeah.
Beginning of next week, starting next week, you'll start seeing the commercials hit. We've updated them to reflect some changes and just make them a little different than what we've seen in the past. But we're excited. We're trending. We're getting there. And I think it's a true representation in the project and the progress we're making.
Chris, I just want to throw out there how happy everybody was at the ADA. They were happy to see you walking. They're like, wow, Tina knows people. Because Chris walked with me, and we helped a couple people out, and they were just so happy to be able to ride back to the start and everything else. And we had more people than we've had since COVID.
Yeah.
So
Good.
I'm really proud of that, and I'm really proud to say that I work with Centro. They say, you work for Centro? I said, no, I'm a board member. I work with Centro, and everybody is just, there were a lot of compliments about you because people here who sat in the seat you sit in have never reached out to us as a group, and they were so happy to see you walk and so happy to meet you. So I just want to bring that back to say, do you remember when you started and I said, come with me and I'll introduce you to my people?
Yep.
I think we've made good on that.
Yeah,
And that makes me happy because people like Rick and nobody wanted to go meet my people.
Yeah.
So
Very happy to be there and certainly be part of that and see that firsthand and look forward to doing it in future years. And growing that team. I know Josh is there every year and helping support it, and the drivers of Call-A-Bus, we were able to showcase the new Call-A-Bus that came in while we were there in the parade, so that was well received as well, which was great. So.
we love the platform.
I hear nothing but good news about it.
People feel more secure. So I mean, I think the efforts that come out of this room to the people who are elderly and disabled, because those two populations, although similar, are a little different, have grown with leaps and bounds, and I'd like to hope that part of that is my presence here and the openness of everyone here to be a part of that.
Absolutely.
Definitely your presence has a lot to do with it.
I-
Julius.
I'm just so glad that we are getting Call-A-Bus out there, because I have a lot of people asking me about Call-A-Bus. When I don't know how to explain it, I tell them who to come. And I indicate to some people that they can, if they want to, they can come to the board meeting and you know, just sit into the crowd and stuff like that. But I get more people trying to ask me about the Call-A-Bus systems.
Sure.
Because I ride the bus all the time.
Right.
Yeah, and we're here to help, so if anybody's looking for a contact, certainly we know the staff downstairs is here to help. Heather, did you have something?
I just wanted to say that I think I might be saying this wrong, in the know with Centro.
Mhm.
The videos you've been doing on social media have been fantastic.
Yeah, thank you.
They're unique and an interesting way to reach a different group of people.
Mhm.
So I just thought, I've been seeing those pop up and I thought, I don't know who's in charge of your social media, but it's nice to see that different type of approach.
Right.
Yeah, that was something we were brainstorming on how to share information without trying to send people to the frequently asked questions page. What is the feedback we're getting? What are the topics? And I think Brent's team, I told them this is what we wanted to see, and they ran with it. And if you watch the progress, the last video was what not to bring on the bus, and they did a great job. It was fun. It was interactive. They did fun. I know we have we're actually doing one next week for a state fair edition, specifically a state fair before we get there this year. But it's something that we're going to continue to do. And so if there's topics that come up, please share, let us know, that we can make sure we get out there. So, any other questions from me? To keep things moving, Mr. Chairman, we're not going to do VP reports, but it is a Call of Us quarterly report, so we're going to have Josh come up and give the quarterly report.
Thank you, Chris. Good morning, Mr. Chairman and members of the board. June was the end of the first quarter, and it was a busy quarter for Colobus. I'll give you each property because they fluctuate so much. Cortland, this is the first time we had a prior year to look back at. Obviously, ridership was lower last year just because we were just starting Colobus in that first quarter, but Cortland was up 70%. Cayuga is up 42%. Oswego is up 19%. Onondaga is up 15%. Rome is up 12%, and Utica up 5%. And that's all looking at prior year first quarter. So the overall consolidated ridership is up 14%, just because Syracuse is like the bulk of the ridership. So it's usually right around that Syracuse number. This is an increase of about 7,223 rides taken for the quarter. On top of that, in June, we added 130 new Colobus customers just in the month of June across all of our properties, 130.
Wow.
So those were new applications that came in and got processed for the month of June for all of our properties.
Josh, do we know how many renewals we have?
So renewals was probably close to 60 renewals for the month of June. So the number that 130 is just new customers.
Are we renewing 3-year or 5-year? I forget.
We're at 5 years. So, and the renewal process for people in all cases is the short form.
Yes.
So it no longer needs the doctor information. It's for people that their condition more than likely is not going to change for the better. So we do a short form that doesn't require a third-party healthcare professional.
You are so appreciated.
I know Richard appreciates it.
Your on-time performance is good for your ability to increase the ridership, but also still yield this performance measure down here at 95% is hard to do.
And I'll say that a lot of that is VIA in the background. They do a great job. We can constantly move things around, and it's moving things around to keep them on time. And a lot of that is, as you see, our cancellation rate is high too. So the day before, when we're looking at it, the on-time performance doesn't look as good, but as the cancels come in and it moves stuff around, that on-time performance adjusts and gets better. So the software is definitely helping us out with these ridership increases.
We just created a caregiver guide on step-by-step. I had somebody test it out and write it with screenshots of what caregiver looks like in the app, and I'll share it with you.
Yeah.
We found that people are struggling to understand how caregiver works. So we made a step-by-step guide, and if it's something you guys find people are struggling with.
So we've kind of rolled it out to a couple places that have multiple people. So Silver Fox is using caregiver. They do a lot of people with dementia.
Does she know? Does she know what? Do you know what the caregiver feature is?
I know that you can. Is that the feature where they track the caregiver can track where their person is? Yeah.
Yep.
So I've actually used it with a couple people. Jen has used it. She uses it to keep an eye on. She says keep an eye on me. Yeah. No, I think she's using it just to know what I'm doing.
It's a great feature, especially if they're trying to meet a loved one at home. They know when the bus is gonna be there, and it syncs them up really nicely.
Any other questions?
Can I point something
Sure,
out?
go ahead.
Your telephone access,
Mhm.
every 2 minutes,
Yes.
call an insurance company.
Doctor's office.
And the other thing is you have a human answer the phone, right?
Correct.
Oh, yeah, okay, now, yeah.
So it is human. We did have some people out for medical too that did attribute for some of that decline from the previous year. So it is down 8%.
Yeah, but those numbers are still,
Yeah, they're still pretty good. The kind of standard for paratransit is right around that 2-minute mark. So that's why we use that number. But there are a lot of agencies, even some in New York, are starting to see those numbers increase just because of the, when you're getting 14-15% ridership increase, it's hard to maintain with the staff that you have, so.
And Josh, are we seeing a drop off in people calling because, like, unless something's goofy on the app,
Mhm.
I'm scheduling all my rides through the app. It's easier for me because I'll schedule for the week, and then if something weird changes,
Mhm.
and if I can change it in the app, I will, or I call.
Yeah, I would say it's about 25 to 30% people using the app. There are a lot of seniors that don't want to touch the app at all.
Oh, yeah. But
So-
I think your young, disabled
Yes,
people are,
we have a few.
I'm teaching people how to use the app.
A few with that are autistic are great with the app and use it consistently. So.
I'm great with the app.
How are you doing when people call when it's outside the area of call bus?
So it depends. So we tell them that, hey, you can come within the service area. If it is within Onondaga County, we have a great program with Onondaga County, the Oscar program, where they get the 2 round trips or the 4 one-ways a month anywhere in Onondaga County. But that's something we just have in the county. But we do let them know, hey, here's where the closest spot is. Typically, we try to pick an area that's well lit, possibly a business, gas station. That way, if they're waiting for a loved one to pick them up or drop them off there, they're somewhere safe that they can stay. But that's typically what we do if somebody's outside the service area.
And that one resident that we had doing that, that made a big difference in her life.
Mm-hmm.
Her husband can't drive all the way to Syracuse because he's also in his 80s.
Yeah.
And all he does is have to take her like a mile up, to get her to that drop-off point and then pick her up after.
Mm-hmm.
And that has absolutely changed the way that they get to the medical appointments out here.
Yeah.
So just even that even though it's outside of the range, it's still greatly helping a lot of people, even, just us helping with that first connection.
Yeah. And I want to say that's at the Walmart in Fulton. Yeah.
Questions? That's a good work.
Thank you.
Mr. Chairman, that concludes our report.
Audit and finance. Okay, we have a motion to approve the first quarter financial statement that seems to be quite in line. Move to the full board. May I have a motion, please? Okay, Heather, second. Tina, all in favor? Aye. We also had a presentation, or don't even like to talk about this, I like to talk about it quick because the numbers were good for workers' compensation renewal. So motion to approve the renewal. Neil, second. Heather, any discussion? All in favor? Aye. Caitlin brought forth procurement thresholds of authorization update, which I thought that was done good, Caitlin. Motion was made to bring it forward to move it. Julius, second. Darlene, any discussion? All in favor? Aye. Caitlin also brought in the renewal the approval for the GenCare software maintenance, which once again is a sole source for multiple years. Motion was made to bring it to the full board. May I have a motion, please? Tina, second. Darlene, any discussion? All in favor? Aye. Okay, I'll turn this over to Bob. on the pension committee report.
This morning we had a presentation from Jim Gould from Lesko, who manages our pension plan. The numbers look great, 1761, but remember, the market's gonna go up and down. And the key to this, the most important number I heard was the plan needs 7%.
Right.
Okay, to be actuarially sound, which we should take comfort that the plan is actuarially sound.
Right.
Okay, and one of the words that came out is part of the problem. And the problem stems from the media. Somebody used the word plunge, and the market a couple of weeks ago didn't plunge, meaning the media exaggerates what's going on in the market, and when it plunges, we'll know. But the portfolio is structured very well between equity and debt, and the debt's there to reduce the volatility. On that, I'd like to conclude the pension committee report.
Old business.
Old businesses that we have in our TNT meeting gonna be Monday coming up. But one thing I wanna mention to Chris, we didn't mention anything about the schedule board down at the hub, about what's going on with that.
So that's a project, that's a work in progress of actually updating that entire, the way we display the schedules. I think we have an agreement, or we procured.
We do, yes.
Yeah.
We're looking at later this year, probably December timeframe, they're talking about installs.
Yeah.
So we're gonna kind of completely redo that. There's gonna be these totems, there'll be 2 out on the platforms and then 1 inside.
So it'll be a whole new system.
About that, Ride the Bus asked me about why the board's not working so much. And I would suggest maybe people who are working down there, maybe keep them updated what's going on with that too. Because the guy who works at the chicken and stuff like
The
that,
booth.
they tend to don't know what's going on, at least when I'm talking.
Yeah.
I can take care of that.
Thanks, Josh.
Okay, Josh, okay. Great. Anybody else? Future business?
I have 2 quick things.
Yeah, sure, please.
So Oswego County is doing our annual Ride the Route class coming up in September. We do 2 of them. Take about 15 residents on the Central bus and we teach them how to ride the bus. And then we transfer onto one of our local buses. We will be taking them to the new hub, kind of get people used to where that is dropping off now. And so we're excited to do that and look forward to working with the
Maybe Heather, you coordinate with the team here, maybe they'll have somebody there to, if there's certain questions that has to be.
Yes, Jeff Thompson's already working on it with me. He's been connecting me with the service team.
Good.
So it's been going great. And then second update is I did send an email yesterday. I'm really hoping we can collaborate. I know the ridership's been down at SUNY Oswego because of the route cuts. The college is putting on a transportation safety event that's multimodal. And so I'd love to have a Central bus there. Students will come by in 20-minute sessions to each table, and I think it would be a great opportunity to do travel training sessions and have someone there to.
Is it inside or outside?
It's outside.
Okay. Yeah, I saw the email come through. We had our RPM event here, so it was a busy
It was
afternoon.
just yesterday, so it was quick, but.
I believe we're already scheduled for that event, but I wanted to confirm that before I responded to your email.
Yeah, wonderful. Love it. Thank you.
Absolutely. Well, yeah, great.
And I forgot about it. I want to give Bren her props for her work at Kelberman Center. I am a proud mama of self-advocacy with them. Bren, you were awesome working with them. I just have to give Bren her props.
Thank you. I loved going out there. It was a good group, and I loved chatting with them. That group in Utica put a petition forward. They contacted us to let us know that they wanted some changes in the route, and it had a very good argument for why it worked in their on their block, and so I went out to talk to them and get more information. It was a great meeting.
Tina, I like how you stretch over to Utica there, that's good.
That is my turf. My turf is
Okay,
Canadian border, Pennsylvania border,
all right,
and
good.
I have to say, I'm a proud mama. I'm highlighting a lot of stuff in my report, my monthly report about how great that was, and I'm sending them all gifts. Because I'm such a proud mama.
That's great, good for you, T. Great, anybody else? Okay, then, motion to go into executive session, seek advice of counsel on a regarding a personnel matter, please. Okay, Heather, second, Bob, any discussion? All in favor? Aye. Thank you. Thank you, everybody, for your work. We board appreciates it. Okay, we're coming out of executive session, no action was taken. We're gonna move for an adjournment, and everybody have a great weekend.
Thank you.
Thank you.